President Trump hits pause in Iran, but the Middle East is far from peaceful as the president gives diplomacy one last shot. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Brenberg, and with us for 2 hours, Fox Business contributor and entrepreneur Marcus Lemonis. Great to have you. President Trump deciding to hold off on a broader military campaign against Iran for now, but telling Axios that he's ready for, quote, strong military action if talks with Iran fail. Ambassador to the UN, Mike Waltz, says the U.S. remains locked and loaded.
As the president said, we are locked and loaded. Even more assets are going into theater. But he's giving talks some space. He's giving it a little bit of room. We've had both Oman and Iran and a number of our other negotiators engaged at every level, from the most senior levels all the way down to the technical level over the past few weeks, and particularly in the past few days.
Oil is pulling back today, waiting to see if negotiators can reach a deal. Marcus, I'll go ahead and start with you. This idea of another pause and more time for talking, is it really about diplomacy at this point, or is it also to give us some breathing room to build up our crude stocks, to build up our munitions, even though the president says we're flush with both? I have to wonder, some are saying that's what this is about, because that if language is interesting to me. It's also coming from the Prime Minister of Israel. If they do this, then we'll do that. It sounds like being on your heels instead of being in an offensive position.
Well, taking a pause is one thing. I think the other issue is that Iran's getting a pause too.
Sure.
And they're going to be able to produce what could be $458 million a day in oil. We keep talking about the effects of the war and how it affects inflation, how it affects fuel prices. And I'd like to pivot a little bit and understand that if this pause is because the munitions are low, what's happening with all the defense stocks? What's happening with the tankers? What's happening with communications with L3? And I asked the team to put up RTX, if we have the RTX stock up. I don't know if we can pop that up there.
A lot higher.
Yeah,
today.
A lot higher. In fact, 52-week high. Mm-hmm. And so when I look at those kinds of things, I wonder, like, is there some truth there? And do they know something about, are the munitions low, and do we need to restock? We've had a lot of conflict between Ukraine and this place in a very short period of time. And are we actually pausing? I don't think a week or two allows us to build that much that fast. Mm-hmm. But I do want to take a look at those stocks.
Well, it allows both sides to catch their breath. But, Brian, we talk about what's happening on the ground within the region. Oil prices are lower today. The Strait, you've got ships that are moving through. The Strait is crucial right now. And so as long as that movement is taking place, there's something to be said for pausing if it gives us some sort of advantage, even if the other side gets the benefit of that, too.
Right. Well, so is the blockade over? We're not shooting at them, but I thought the blockade was still on. So I'm wondering about that $450 million in revenue that they may or may not get. If we're still blockading them, then I think they might still be cut off from that revenue, which is good. We're saying we're not going to shoot at you. They're saying we're not going to.
Where we left it was the economic sanctions had been put back on, that it took some time to get that into effect.
Right. Okay. So I don't see this as an enriching time for them. I do see it as a time where they can dig out. We've destroyed a lot of things. They can dig things out if they want to. I don't like that, because the kind of the ebb and flow of this whole conflict has been, we destroy their stuff, they dig it out, they shoot at a few ships, we do it again. I don't like that. I don't quite know where the end game is on that. But you look at the reaction of oil markets to this little thing we got going here, and a lot of us sit back and we hear, like, well, we're going to give talks a chance. And I'm always skeptical. I'm like, I don't think it's going to work. These guys haven't changed. But markets continue to respond favorably to these little interludes, which tells me that the oil story is on our side, the infrastructure story is on our side, not Iran's. And I like that, which tells me we've got time on our side, Jackie. The longer this goes on, the worse actors that Iran chooses to be, the more the world says, we want out from Iran, we're going to do something else. And I think Iran knows that. I do think they know that their leverage is slipping away. And that's a long-term win for us, even if in the short term it's chaotic like it appears, and even if the short term the American people say we're not going to give President Trump credit for that. Even if they say in the midterms we're going to punish Republicans because we don't like how this is going, the long-term story to me is still we're getting an increasing advantage on energy and oil around the globe.
Yeah, Dagan, you take it where you want to go, but something that I find interesting, to Brian's point also, in terms of how long this is going on now, 99 days till the midterms. So I'm thinking about gas prices, I'm thinking about inflation, I'm thinking about what the Fed will do at its next meeting. I'm thinking about all of these factors that impact us here at home as we wait to see how it unfolds.
It's worth noting that the memorandum of understanding that President Trump and the White House issued that entered into the first ceasefire with Iran came out just hours before the Federal Reserve's last press conference. And now you've got a Fed meeting this week. And now there's another cessation of hostilities. I think that munitions are probably not the reason. The reason is to give Kevin Warsh, as the new Fed chief, some breathing room about whether to hike interest rates. I think last Friday, the odds were 40% chance that there was going to be a Fed rate hike this week. In part, the 2-year is telling the central bank rates need to be higher, given the backdrop. So the 2-year has come down, but the 2-year had shot up. To put it in perspective, the Fed funds rate, the overnight lending rate, is at 3.5 to 3 3/4, and the 2-year has gone up almost a whole full percentage point since the beginning of this year, to tell you that there are problems with not just inflation, but like borrowing, that because of the supply coming online, rates need to be higher to attract demand from investors. So it seems like that this pause was to have all of these pressure points pull back a little bit, and you've seen that across the board. The oil price, $100 a barrel, it was at over 93. The 10-year was at 4.7, and then the 30-year was well north of 5%. So you've gotten a pullback right now, but to what extent is this lasting? That I don't know, but you don't get a Fed rate. I don't think you get a Fed rate hike this week.
It's all very interesting. And Taylor, I noticed you kind of wanted to jump in not only just on the Fed, but on the defense stocks. So how are you looking at all this?
Yeah, I have some good news, and then we'll end with the bad news, and maybe that'll be a debate. CENTCOM.
I'm a bad news first, get it over with.
I usually start with the bad news. Yeah, start with the bad news.
All right, let's do it. Credit spreads are widening if you're rated CCC, which is your junk rated. Spreads are now the highest since April of 2025. That might be more of like a corporate AI story, maybe not so much an Iran story, but the market is looking at investors pretty much all across the board saying, I'm going to demand more money from you than I was a couple months ago, because I'm more worried today about your ability to repay than I was a few months ago. So that's just something that I'm watching. I don't like high since April 2025. But then there is the good news. CENTCOM says that they've redirected 17 commercial vessels, disabled 2, and boarded 2 to ensure compliance. So your little blockade, Brian, I do believe is still in effect. 29 crossings through the Strait of Hormuz over the weekend. Usually we know that's 100 a day, but it's not zero. And I think we're seeing more reroutings through the Bab el-Mandeb, because that usually gets 50 to 70 a day. And over the weekend, they had 100.
So the Houthis have backed off. I mean, after hitting those Saudi ships.
That's what
not viewed
I
as a credible of a threat as we thought it was a week ago or 4 days ago.
That's how I view that. Is that how you view it, or you?
I mean, if those numbers are true, yes.
Yeah.
I've wondered, how much do the Houthis want to be in this right now? Do they want to do Iran's bidding right now? Because they're going to get Saudi Arabia's ire, and it sounds like Saudi Arabia is ready to deal with them potentially. I don't know if they want that, so that's an interesting fact.
And then final good news. Durable goods orders this morning. I know some of them came in below expectations, but this economy is firing on all cylinders, and it's more than just a data center build out. In the last 3 months, aircraft we know is up 147% on an annual rate. Primary metals up 37%, machinery up 18%, computers and electronics up 17%. So we know some of that is the AI build out, but it's a build out and it's an economy that is powering higher. So that was, I think, more good news in terms of ordering, building, investing here in the U.S.
Okay, so let's talk about the underlying fundamentals, because I think that's an important part of what is happening with the market right now as we go into a Fed meeting. We've got a big week of earnings. You've got big tech companies reporting, 4 of the Magnificent Seven, Meta, Microsoft, Apple, and Amazon. Your thoughts on what we're going to hear and what investors will glean from it?
I'm still fixated on Dagan's comments around, I don't want to use the word manipulation, I'll use the word coordination of pulling back in the middle of a war in anticipation that somebody may say, well, if we're pulling back and gas prices pull back and all these things pull back, is it enough to get me to pause raising rates? But then when I hear the durable goods...
I'm not suggesting there's any coordination between the White House and Warsh and the central bank, but it certainly gives Kevin Warsh breathing room.
Okay.
I'm not suggesting anything of the sort.
Coincidental coordination, then.
But a coordination suggests that there is...
manipulation.
Right, and I'm not suggesting that.
I think on top of that, the durable goods numbers tell you that if the economy is running that hot, and if all these rates are moving the way they are, and if poor credit is getting higher prices, then maybe a rate increase isn't off the table.
Mm-hmm.
I
mean, I know you guys don't like Neil Dutta. He came out this morning and said, I'm calling it. We get a rate hike on Wednesday. Ooh. I think a lot of people say there's no way, and if not, then it'll be September. But I don't think it's, the chance is not zero, is what I'm saying.
So it was 40% Friday. I will add, though, the one thing that Kevin Warsh watches, I don't want to say above and beyond everything else, but one of the things he watches most closely are the inflation break-even numbers. And they are still very well anchored from the 2.72 in early May. They fell off a cliff and were at 219. They're still right around 222, 223. That they ticked up a little bit, but they're still very well grounded, even with the resumption of hostilities between Iran and the U.S.
The labor market is in that sort of Goldilocks area, in my view, where it's not too hot and it's not cool. So he's got that under control, even if the inflation numbers or people are worried, you know, to your point, Dagan, the numbers look good, but they're worried about the oil price now. You could truly make the case that this is transitory, and we've seen the volatility in oil prices and how fast they've come down when the conflict is over. I mean, at some point, this conflict will be resolved. Can
I say something real quick on the Fed thing? Because I thought that was interesting, too, and I've seen the comments about the timing of all this. I just want to say, I think there are people who want to see what Trump does as trying to manipulate things, especially with the Fed. But I think there's a simpler explanation, which is he's somebody who watches a lot of data points. And he has a team that watches a lot of data points. They watch yields, they watch oil, they watch what's going on in the economy. And so I don't know that I think a critic wants to say, look, he's trying to pull strings to do something with Warsh. You could also just say he watches economic indicators and he takes that into consideration in the context of what he does with the war.
Absolutely.
And that's not a conspiracy. It's just a guy who pays attention to a lot of data.
To everything that's happening.
Financially, economically, but also politically.
Sure.
Yeah.
Okay.
Jackie, you mentioned one last thing. You got a lot of earnings reports of some of the big tech companies this week. I think people are going to be more focused on how much money they spent in the quarter than what their actual results are and what they see being their revenue going forward.
Right, what the return on that spending is.
The pressure's rising.